Hello and welcome. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna.
And I'm your host Malika Mishra, and along the next 1 hour of the show, we will together be taking up all your queries. So don't forget to call us on the numbers flashing on your screen anytime now, and also you can write to us on WhatsApp, both the numbers of which are available to you. And therefore, pick up your phones immediately and call us with all your stock related queries. Today, we will soon be joined by Lancelot Dicuna. He's a CIO of Value X Wealth, who will be joining in on the fundamentals. But meanwhile, we have Gaurav Sharma with us. He's the Associate VP and Head of Research, Equity, Commodity and Currency from Global Capital, joining in on the technicals. Welcome, Gaurav. Thank you so much for joining in. Let's dive straight into our first query. Keshav from Coimbatore has written to us asking whether this is the right time to enter IndusInd Bank. Now, IndusInd Bank, particularly speaking, has continued to sort of trade with the downward momentum, especially after discrepancies were found in its derivatives trading, and a lot of headwinds has been observed for the stock, which has also dampened its near-term outlook. What is your sense of IndusInd Bank, and how does the technical chart look like now?
Still, this stock is not out of the woods. There is a lot of volatility here. Yes, we did see a bounce back that came in from 650 and it went past 850 odd levels. Again, it is heading southwards. So I don't really think that it is a good time to even look at it from a trading perspective, because these kind of moves are likely to continue. It is better to avoid this stock and look at the four top picks: HDFC, ICICI, Kotak, and Axis from the private sector banking space.
Understood. Thanks for that view, Gaurav. And viewers, I'm sorry that I'm having a bad throat today, so please bear with me. And we have a query, WhatsApp query written to us from Udaipur. So Lachi is holding 200 shares of EPL at 221 rupees, and she's looking for a long. She hasn't mentioned the time horizon, so I'd like to take Gaurav's view on it for the short term. Gaurav, EPL currently it's trading at 232 and was up in trade today over 0.5% as well. But what's your outlook on the counter? Are you positive?
From a short-term perspective, a little decline here is a good buying opportunity. Since the viewer is already holding the stock, I would advise that he should go on holding it, take a stop at 210 and look for targets close to 250 to 260. There he should consider booking some profit, 60 to 70% of his position.
Understood. And now we have Ramachandra calling us from Guntur. Hi Ramachandra, good evening.
Good evening, madam.
Please ask your question.
My query regarding Swiggy.
Okay.
I bought 1,000 shares today at the rate of 310 rupees.
Mm-hmm.
Can I add more shares to tomorrow or day after tomorrow for 1 year term?
Understood.
Today
For
1 year.
Okay, for a year. Okay, got it.
Today is a yearly low today. That's why I purchased.
Understood. Got it. Gaurav, Swiggy is such an interesting stock to talk about, but just before that, for the benefit of our viewers, Ramachandra from Guntur currently holds 1,000 shares of Swiggy at 310 rupees a piece, and he is asking whether it would be a good idea to continue holding these 1,000 shares that he bought very recently, in fact today, for the next 1 year per se. Now, a lot of fundamental factors have been disturbing the performance of the stock, and the most recent being the fact that the stock plunged to about its 52-week low, especially after lock-in period expired, and there was a dampening in the shareholding. How do you I wouldn't say fundamentally, but technically also view the stock, because if the fundamental story is sort of weak, how could it be possible for the technicals for the stock to look good? So do you see strength in the technical story of Swiggy or not?
Not at all. I don't see any strength in the stock coming in anytime soon. The viewer has rightly mentioned it has touched a new low today itself, and it has just been hitting lower lows.
a network issue with Gaurav Sharma's video, but I think we have Lancelot, right, with us? Okay.
Yes.
Hi, Lancelot. Thanks for finally joining us. We were actually talking about Swiggy, and it would be interesting to know what you think about it, because it's, there's been a lot of concern lately. Number one, it comes from a very competitive space. There are projections about how long it would be able to burn its cash for, and then also there was the lock-in period expiring very recently, and the stock plunging to its 52-week low. Give us your sense of what you're picking up on Swiggy, and how does the stock look like to you?
So I think, there are two parts to Swiggy's business. One is the regular food delivery business, and the other is the quick delivery services for groceries, etc., which is the Instamart business. And that is a space where there is seeing increased competitive intensity, because several people, apart from Zomato, there is Reliance Fresh, there is the Tatas who've come in, and everyone's attacking that space because they are seeing a greater margin. A greater market as far as growth is concerned. So the question is that in order to dominate that market, most of these companies will have to deploy a large amount of cash. And Swiggy's ability to generate that kind of cash is still in question mark, because now that it's listed, it will have to sell shares, additional equity, if it wants to raise this equity. And the bottom line, that is whether you can see profits in the near term, is very, very difficult to see. Maybe it may happen after 3 to 4 years. So for a listed company to try and raise this kind of capital, which is totally long-term capital, becomes extremely difficult, and hence without cash, I think Swiggy's business will struggle, and the existing food delivery business will keep subsidizing, or the burn will continue, and it will be extremely difficult going forward. So it's not yet an investment case at this point of time, until you see the source of money available and the quantum of money required freely available. It will be a very difficult task to consider it as an investment option.
Understood. Thanks for that view, Mr. Lancelot. Now we have a caller joining us from Andhra Pradesh. Hi, Ishwar. Good evening.
Yeah, hi, good evening.
How can I help you on the show today, Ishwar?
Yeah, I have purchased 3,000 shares of Jyothy Labs Limited at 370.
Understood. Yeah.
Yeah, actually I purchased it with short-term intention, but due to the results, it badly affected in last 2 days trading.
Yeah.
So I want to know what action I need to take, and also there is a US and India trade deal. This is going to happen on May 17, right? Is this trade deal going to affect anything on this FMG sector or on this particular company?
Understood. Mr. Lancelot, I'll direct this question to you. Ishwar is holding Jyothy Labs shares, stocks, and he's bought 3,000 shares and is sitting on a loss of, over 1 lakh rupees there. So amid the US-India bilateral trade, discussions about to happen. So, what's your outlook towards the counter? I'm sorry, I have a very bad throat today. So what's your outlook on the counter, and what suggestion do you have for Ishwar there?
So I think, given the outlook for the company being rather difficult, they are going to see very challenging times going forward. And the existing, the business environment is also looking a bit difficult. So I think one should not take a long-term view in terms of trying to add to the stock at these levels, because there is no clarity as to what is going to be the future earnings of this company over the next 12 months to 24 months and how that can be impacted. So it's best to either look at booking your losses and exiting and moving the capital that you have to different stocks, or you can either leave it there and maybe review the decision after a year, after 6 months or a year, and in which case you can see whether the outlook for the company has changed, and then whether it might make sense to add. But at this juncture, it is not really sensible to add to the stock given the challenges that the company is facing.
Okay, understood. And now we have Nilay calling in from Patna. Hi Nilay, good evening.
Good evening. I would like to know about Aether Industries.
Okay.
It's office open today for non-retail, and for tomorrow is for retail. Whether is it worth applying at this price?
Okay, got it. Um, Mr. Lancelot, I'll first come to you on Aether Industries, and then we'll also discuss the technicals about the stock. But Aether Industries hails from the Indian chemical manufacturing space, and what is your sense of Aether Industries? Do you think, I know it's too early to comment because we don't have a lot of information and also past performance to compare it to, but do you think it'll be able to make a strong footing for itself in the chemical industry?
So, Aether Industries is one of the, different kind of chemical companies because they do a lot of contract research manufacturing, and we've seen that space grow in the medical or the healthcare space where pharma companies, outsource the contract research manufacturing, and then thereafter, when it builds to scale, they take over this manufacturing overseas. So Aether is following a similar model as far as the space is concerned in terms of chemicals and specialty chemicals. So it takes over new chemicals that are being designed. It creates a pilot plant, gets the proof of concept, does then contract manufacturing for a while till scale is built, and thereafter, transfers the technology to the company who has actually paid for the whole setup. So while the business model looks good, it involves a lot of capital expenditure upfront. And, at this point in time, given the state of the, global market for specialty chemicals, there could be a lot of unknown surprises coming in on that space. And this is probably the second time which Aether has raised money on a private placement basis. Earlier, a couple of years ago, it also raised cash on a private placement basis. And the fundamentals still look, a little expensive, considering that there are going to be global challenges. So I would not suggest that one should invest at this point in time. Wait for, maybe a further dip in the stock price till it reaches a reasonable valuation, because once the fresh equity is issued, you could see some amount of selling, bring the price down, and then maybe at lower levels, it could offer an interesting opportunity to invest in.
Understood. Thanks for that view, Mr. Lancelot. Now we are joined by a caller from Cochin. Hi, Tanya. Good evening.
Good evening.
Yeah, how can I help you?
Wanted to know about Intellect Design.
Okay.
I purchased around 121 shares, I think at 815 average price. So I wanted to know if how its revenue and profit growth is it overvalued or undervalued, and is it like a midterm or a long-term stock to hold?
Understood. So, Mr. Lancelot, again, I'll come to you on this one. Is Intellect Design a company, that Tanya is holding shares of? Do you advise Tanya to hold it for midterm or short term, or it's a long-term bet? So what's your outlook on the counter? Because currently she bought it at 815. Currently the stock is trading at 913. So what suggestion do you have there?
So, Intellect Design is a product company and it invests in the product. So whenever it makes investment in the product, it seeks to license out its product to various users. So the license fees, the moment they increase beyond a level, or the the clients using the platform or the product keeps increasing, then you will start hitting a threshold where beyond which every incremental license you sell actually adds to the bottom line. So one has to look at the investment phase in Intellect Design and how much more cash is needed to be invested over the next couple of years, and what kind of license fees or income from their products being used by others can be generated. The space keeps on changing very quickly, so it's very difficult because technology changes happen at a rapid pace. So it's very difficult for a company to sustain it on a long-term basis, and hence one needs to be a little cautious at when you are investing in this product type of companies. So if the products do not sell, then the entire investment could actually drag the company's financial performance down dramatically, and then you could be in for a severe re-rating. So if you are looking at it from a short-term perspective, since you are in profits, I think the best option is to take some profit off the table and probably wait whenever there is an opportunity to buy it at an attractive valuation. You can look at adding to the stock.
Right. Thanks for that view, Mr. Lancelot. And Gaurav, I'd also like to come to you. Talking about the levels, so are these the elevated levels, or what suggestion do you have for an investor who wants to accumulate the counter, let's say for short term?
I will not suggest to accumulate this stock at the moment since she's already holding it. Some more rooms is still left. This stock is likely to test 1,000 levels shortly. So she should consider some booking around those levels. No fresh entry suggested. If they are looking for a fresh entry, it is better to wait for a dip to around 825 odd levels. Then she may consider.
Okay, so no fresh entry suggested with regards to Intellect Design. And now we have Shiv Kumar calling in from Bengaluru. Hi, Shiv Kumar.
Hello.
Hi, please tell us your question.
Hi, good evening.
Good evening.
I hold LIC India 32 shares at the average price of 902 rupees.
Okay.
But even after holding for a very long time, it's not showing any movement. Neither it is giving me any of the profit. So should I switch on to some other sector or some other shares in the financial segment itself? I don't know what is the fundamental default that LIC is having, that it's not even moving apart right from the range of 750 to 810, 820 rupees. That's it.
Okay, I understand the concern. Gaurav, I'd like to come to you on this one. LIC is, a business leader per se in, the kind of insurance it offers, and it's definitely a leading player in the insurance space in India, and it has been for a very long time. But the stock momentum per se has been very stagnant, or if I could zoom out and say that since July 2024, the stock price has seen a lot of fall, a substantial amount of fall that would concern any investor who's invested in LIC. In the case of Shiv Kumar, he currently holds 32 shares of LIC at 902 rupees a piece. And since it has been so range bound and restricted in terms of its movement, what would your technical advice to Shiv Kumar on LIC be?
First thing I want to tell Mr. Kumar that LIC was moving in line with markets prior to the recent decline that we have seen from its top that was around in the month of August last year, trading somewhat around close to 1200 odd levels. It slipped to levels close to 700. Now it is on a recovery phase, currently above 825 odd levels. Some more upside is quite possible. I think a lot of pain he has already seen it. A lot of consolidation has already happened, and now there is good room for a reasonable up move towards 950 and even 1000 levels in a month or two. So it is better to hold on to his position as of now.
Understood. Thanks for that view, Gaurav. And with that, we have a caller joining us from Chennai. Hi, Sanju. Good evening.
Hi, good evening. This is regarding Axis Bank.
Yeah.
I got it around 300 shares 6 months back.
Okay.
It fell down sharply, and then it is above my purchase level. So I don't know whether if you hold on and move up. So I'm just concerned whether I should exit now and then re-enter at a lower level if at all it will not hold.
Okay, Sanju, and are you a short-term investor? When you initially invested in the counter, were you planning to hold it for long-term or short-term only?
Short-term.
Short-term. Okay, so you in short-term, you have made a profit of 13,000 there. So congratulations on that. and I'll get your query answered. Gaurav, what's your advice to Sanju? Should he book his profits at the current levels, or do you advise him to stay invested for 3 to 4 months or 6 months down the line so that he can make more profits there?
He should stay invested. These are good levels for the stock. I see it heading towards 1250, 1300 zone in the next 2 to 4 months time frame.
Okay, understood. And now we have Suhas. He is calling us from Bengaluru. Hi, Suhas.
Hey.
Please ask your question.
Yeah, I hold 10 stocks of Tata Technologies at the rate 666.
Okay.
I would like to know the medium-term view on this stock.
Sure. And since when do you hold these shares of Tata Technologies?
I think I just bought less than a month ago during the when the market was down.
Okay, so then there definitely must be a rationale behind purchasing them quite recently, right? What was that reason for you?
I know, like after IPO, the stock went up almost 1400 and seen significant correction. And this comes from Tata Group. Business-wise and all, it's like solid. And I think they provide some kind of technology to automobile, and with JLR doing well, I hope this might be a good, company yielding results in the near future. So that was my rationale. Yeah.
Okay, thank you so much for explaining that to us, Suhas. And let's see what our experts have to say about your investment in Tata Technologies. Lancelot, I would like to take this question to you first. So, Suhas from Bengaluru currently holds 10 shares of Tata Technology at 666 rupees a piece. The stock has, although risen to about 700 odd levels, which has given him a meager profit. But it is interesting to see, number one, the stock has fallen about 20% year to date. And second, there has been a mixed bag of views coming in from brokerages, especially with regards to Indian IT, where for the longest time in recent past, Indian IT was a pain point, and now it has gone back to being the focus again, especially with US doing trades with different countries and easing on tariffs. My question to you is, do you think Tata Technologies would be a beneficiary of maybe the kind of gradual, slow, patient tailwind we are projecting for the IT industry? Or do you think the kind of correction the stock has seen, it will continue to see for a longer period of time?
So, if you look at the valuation of Tata Technologies and its earnings, it's trading at about 42 times earnings. So that is an expensive valuation for an IT company. If you look at Infosys, it trades at 24, 25 times. And if you look at the other TCS, they're also at in the mid 20s. So when you look at, you are paying a premium for the company. And if you look at the profitability, it's not that growth is going to be so rapid that it justifies the additional premium that you're paying. So while in the short and medium term, it is very unlikely that you're going to see re-rating of the stock. There was a lot of interest in the company at the time of the IPO, and the IPOs generally are priced to perfection because many people, investors are looking to offload based on the merchant bankers, pitch as to what this company can generate. And so definitely, you are paying a higher price multiple for this stock. So it will take a while for valuations to become reasonable. And at that point in time, maybe one can look at accumulating it from a long-term perspective. But from a short and medium-term perspective, one cannot expect great returns in the short and medium term unless performance of the company suddenly dramatically changes, which is very unlikely given the current global scenario.
That's very interesting, Mr. Lancelot. Gaurav, I'd like to quickly, talk about the technical charts, especially because for anyone who is maybe perhaps going ahead and accumulating shares of Tata Technologies, what would your stop loss at this given point of time be? Because the chart itself, the 1-year chart, is dark red in color right now.
Yes, rightly mentioned. If we purely have to look at charts, it is very negative. When you talk about a stop loss point, so it is 640. 640 should be the stop loss. Since the viewer has purchased it at a very, very fine level, which is the point when it just started its up move, the recent up move I'm talking about. So I expect it to extend it a little further till 740, 750 zone. So he should consider exiting and booking profit in his position around that mark.
Understood. Thanks for that view. With that, we have a caller joining us from Bengaluru. Hi, Shankar. Good evening. Shankar, are you there
Hello.
on the phone line? Yes.
Hi, ma'am. Good evening.
Good evening. Please go ahead with your query, Shankar.
Ma'am, JK Papers stock,
Okay.
500 quantity, average price 360, profit 40,000, 15,000 loss, ma'am. Seller word, ma'am.
Okay. And are you a short-term investor, Shankar?
Short term, 9 months, ma'am.
9 months, understood. So, Gaurav, currently the stock is trading at 332 and Shankar is sitting on a loss of over 13,000, nearly 14,000 there. So, so how is the stock performing relative to its moving averages?
It is trading below its medium and long-term moving averages, that is 100 and 200 period exponential moving average. Some bounce in the past couple of days was seen where it went up from 300 to currently around 330, 335 odd levels. A little extension to this bounce can be witnessed in coming sessions, and I think that should be the time when the viewer should consider exiting the position, as overall the formation is not at all upbeat, and the stock is more likely to take a downturn after a slight rise from these levels.
Okay, noted. And now we have Arihant calling in from Bengaluru. Hi, Arihant. Arihant? Okay, I think he's listening to television right now. No issues. Arihant basically, Arihant basically had called us to know about Infibeam. He currently holds 1,130 shares of Infibeam at 27.86 rupees a piece. The stock has dropped down to 18 odd levels. Now, I don't know what exactly his query was, but Gaurav, I'll come back to you on this one. The stock is now trading around its 15-day moving average and has seen a bit of pain recently, a sharp correction as well. What's your sense of Infibeam?
On charts, it is just not good. Completely off track, not able to perform in over an year actually, and the consolidation, some bit of consolidation is here, but I really doubt whether it will be able to hold or not. He should utilize any bounce towards 19.25 to actually book his position.
Okay, got it. And viewers, we'll have to slip into a short break, but keep sending in your queries on WhatsApp as well as call us on the numbers available to you. We will be right back on Ask Profit only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims. Is the outlook as rosy as the company claims? Know your company, powered.
Welcome back. You're watching Ask Profit only on NDTV Profit, a show that answers all your stock related doubts. Today we're being joined by Lancelot on the fundamentals and Gaurav Sharma on the technicals. So do pick up your phone and call us on the numbers available to you. Let's talk to our first caller waiting for us right after this very short break. Rani is joining in from Chennai. Hi Rani, good evening.
Hello, I wanted to know about V-Guard.
Okay.
How is it compared to its competitors, any in the same sector, any potential risk? And its PE ratio looks a little high, so I just wanted to know which levels to enter at. And also, if possible, I was also comparing it with Wonderla. Wonderla is also owned by the same management, Chiklapalli. So I wanted to know if they are aware which is a better stock among the two to consider for long term.
Very interesting. Mr. Lancelot, I will direct this question to you straight away. Rani from Chennai wants to know how you view V-Guard Industries, and she also spoke about Wonderla because it is, they share a common management. But let's talk about V-Guard first, because she did point out the high PE ratio that it trades at. Do you think that is discomforting, and what else stands out for you in the stock?
So, I think V-Guard is expensively, valued at this point in time. But, and one needs to be a little bit, cautious when entering a lot of these, electronic equipment stocks, because there has been, they basically sell, consumer durables like electric water heaters, solar heaters, kitchen appliances, etc., and various small domestic appliances. Now there has been, concern that yes, the competition is heating up in this space. Cost of raw materials are moving up, and margins are also getting impacted. So, given that background, and the fact that it's trading at almost 55 times earnings, which is an expensive level to buy into the stock. Any quarter where there is any negative re-rating in terms of earnings or in terms of costs, etc., that could result in a severe re-rating of the stock, and you could suddenly see it drop much lower. So from a risk return perspective, it is a high risk item. While there is, that space is growing and the company is growing in that space, it's a very high risk, investment, considering that it's trading at a high P multiple. So I would look at, being a little careful in terms of making investment. And if you are making profits, then it's better to book profits when the risk is high and wait for an opportunity to enter again at much lower levels.
Okay.
As far as the comparison with Wonderla is concerned, see, they are totally, while they may be owned by the same management, they're totally different spaces. Right. While V-Guard operates in a particular space, Wonderla is a totally different business. So you cannot really compare different businesses and say, should I be in V-Guard or in Wonderla? If you look at Wonderla, you got to look at the other competitors in the space and whether there are better, let's say, opportunities in the tourism space. In the tourism space, the people who are able to hold on to pricing power have been able to maintain their growth and are reasonably valued. One should look at investing in those companies rather than maybe a Wonderla in the space. So a company like maybe an Indian Hotels, Lemon Tree Hotels, where you are seeing strong growth as well as improvement in margins and the ability of these companies to hold on to their client base, I think one should stay invested in such type of companies.
Understood. Thanks for that view, Mr. Lancelot. And with that, we have a caller joining us from Indore. Hi, Kamal. Good evening.
Yeah, hello, good evening.
Yeah, how can I help you?
My query is regarding KFintech. So I'm just tracking this stock since long, and I'm holding as of now 100 shares. And currently I've seen the news that General Atlantic is selling their, I think, 6% stake.
Yeah.
But I wanted just to know about the long-term view, 4 or 5 years or more than that. So can I add at this level?
Okay, understood your query, Kamal. Mr. Lancelot, Kamal is looking to invest, like he's already invested it, but he's planning to hold it for 4 to 5 years, KFintech. So are you firstly optimistic on the counter? Secondly, do you think in terms of valuations, it's properly valued because the P ratio is pretty high. So how is KFintech positioned itself compared to its peers?
So I think, when one has to look at investing in a company, one must understand the business it is in and what kind of monopoly or position it has in terms of pricing its products and services. So KFintech is primarily a registrar business. And yes, while there is a huge growth in the number of demat accounts and the transactions, they will generate higher volumes. But at the end of the day, it is entirely driven by a low margin because every regulator is trying to see how to reduce cost for investors. And so margins will be under pressure as the volume grows. So given that background, it is better to be invested in a high value business or a high profitable business, although the growth may be little smaller or little lower in terms of percentage. So while you may see huge revenue growth from KFintech, it's very difficult to see that it will generate similar amount of profit growth. The second thing that one has to consider in the cases of a company like KFintech is that technology changes will make investments in the space a lot more difficult, and the returns on the investment also will not grow as fast as anticipated. Given that it's already trading at a high multiple, it's better to stay out or away from the business. If you are making profits, it's better to book profit and stay out till valuations become low, then you can consider it again.
Right. Thanks for that view, Mr. Lancelot. I'm sure Kamal will get benefited from this advice. And Gaurav, talking about, the technical charts. So what does the chart suggest? Are you positive on the counter for short term?
Not really positive. Of late, it came up with a good inverted head and shoulder formation, broke out above the same. A healthy up move from 1020 till 1300 was seen, but that just went off. Stock is again down, trading around 1050 odd levels. So these are not good signs when the stock fails to hold. Given that, the only thing positive on charts that I can see is, current placement is just at a level where it will find support from multiple moving averages, and that's the last hope that I'm having for this stock. So what I suggest is taking a closing stop below 1000 odd levels and just hold this stock.
Okay, got it. And now we have Krishna joining in from Andhra Pradesh. Hi Krishna, good evening.
Hello, very good evening everyone. Thanks for having me in NDTV Profit.
Most welcome. Please ask your question.
Yeah. I just want to deploy like 1 lakh invest for 1-2 months. So at the moment, which chart or sector, which chart or stock is looking good at the moment? Can I please get a solution?
Okay, sure. Gentlemen, I would take this query to both of you, and Mr. Lancelot, I will begin with asking you that, my personal observation of the market has been extremely impressive with the fact that when India and Pakistan were undergoing tensions, and in fact geopolitical tensions still persist, Indian markets dropped about 1.5%, not more than that. Not exactly matching the intensity that was definitely higher on ground. And so following up to that, I would like to ask you, do you consider the Indian markets to be a low beta market? And in such a scenario where Indian markets have held firm and we have good amount of traction coming in from both DIIs and FIIs. Which sectors stand out for you as interesting ones to invest in at this given juncture?
So I think if I have to look at it, one cannot look at only the the short-term market move to take a call, whether the market is the right time to invest or not. But one has to look at, a little longer term perspective, that valuations in the market currently are not at the cheapest levels as they should be. And we have seen a slowdown in many sectors in the earnings growth, and even the outlook for many sectors has been a bit muted. So, given that background, it is very difficult to justify high earning multiples for stocks where the earnings growth is not going to be high. And in some cases, we are seeing even revenue growth is not happening. So I think one needs to be a little bit careful, and we've seen the slowdown, whether it is the consumption space, whether it is driven by slowdown in rural demand. Then there was a slowdown in urban demand. There's been a slowdown in the government spending, and there's even been a slowdown in the estimation of the forward GDP that which we are expected to grow at. So given that, given all these things, one should be a little careful in terms of investing. You need to invest in a sector where growth is expected to be good and valuations are reasonable. So I would look at spaces like the IT space where valuations have been reasonable or are reasonable because the stocks have corrected quite a bit, and try to look at companies within that space which have strong growth potential as well as the downside risk is limited. So that's something which I would look at, and I wouldn't say that we are a low beta market, because at the moment, while the last couple of years we have not seen a severe drop in terms of values or in terms of prices, there's nothing to stop that from happening in going ahead, because liquidity is both a friend and a foe of market. During the period when there's high liquidity, markets can rise very fast, but when liquidity dries up, you could see a severe fall as well. So one needs to be a little careful when saying that India has become a low beta market or a low volatile market, because it may not necessarily be true all the time.
Definitely, definitely, and thank you so much for clearing that. I would also want to ask, Gaurav, your top 2 to 3 picks or sectoral picks, if you could suggest our viewer to invest in.
I'll be looking at the banking and the NBFC space, specifically the PSU banks like Canara Bank. When we talk about NBFC, I am talking about stocks like Shriram Finance, LIC Housing Finance. So this space looks really attractive to me, and I think there is good amount of room left. So from a year-long perspective, I think 20-25 odd % can be expected comfortably expected in these stocks.
Understood. Thanks for that view. With that, we are joined by a caller from Chennai. Hi, Ram. Good evening.
Yeah, hi, good evening.
Yeah, how can I help you today?
Yeah, I got 100 shares of IndusInd at 825.
Okay.
So I just want to know, I am okay to add another 50,000 in this stock. So I want to know about long-term perspective, how far the stock will perform in next year, 1 or 2 years. It is okay to add more stocks now.
Okay, so you are holding 100 shares of IndusInd Bank and you want to accumulate more, am I correct?
Yes, correct.
Okay. And are you a long-term investor, Ram, or a short-term investor?
Yes, I am planning for 2 to 3 years.
2 to 3 years, understood. So, Mr. Lancelot, talking about IndusInd Bank, the bank lately has been, surrounded with a lot of news, and with that comes a lot of uncertainty, and investors get a bit jittery as well. But the fundamentals of the bank remain strong. So, what's your outlook on the counter? Secondly, is it advisable for Ram to accumulate more of IndusInd Bank at these levels?
So I think, when you look at IndusInd Bank on a valuation perspective, it's trading at below book value. and which is an attractive level to invest in a bank when it's below book value. However, one has to consider that the top management of the bank has recently resigned, and the new team is yet to a new person is yet to take over the helm of affairs in terms of bringing significant change and dynamism to the banking sector for IndusInd Bank. So at this point of time, while the stock is looking cheap, it is cheap because there have been negative perceptions or negative issues with regard to the stock and regard to its operations. So that needs to get clarified, and maybe we need to see that there's significant emphasis being placed on the accounting and the the microfinance book, etc. So once you are clear where those issues are and that no new surprises will come up, then probably you get much greater confidence to invest. It doesn't matter whether you invest a little higher, but if at a little higher level, but if you're investing where the known factors are out, known facts are out as to who's taking over, who's going to be driving the business, and what kind of systems, etc., have been changed so that the bank continues to grow, then at that point in time, it would be a better option to buy and accumulate the stock.
Okay, understood. And now we have Naveen joining us from Karimnagar. Hi, Naveen. Naveen?
Hi, ma'am. Good evening.
Good evening. Well, which state are you calling us from? Because my geography is not too good.
Telangana, ma'am.
Okay, Telangana. Welcome to the show. Please ask your question.
Ma'am, actually, 2 years back, I invested in Affle India at the price of 1200.
Okay.
Oh, so, ma'am, can I continue for this stock for next 1 year or 2 years?
Did you buy them at 825 rupees?
No, 1200.
1200 rupees. Okay.
1200,
you bought
yes,
them at
ma'am.
1200 rupees and 1200 shares.
No, ma'am, 100 shares only.
100 shares at 1200 rupees.
Yes.
Okay. 100 shares at 1200 rupees. Okay. And you want to know whether it would be the right thing to exit, right?
No, ma'am. I wanted to continue for next 1 year.
Continue to, okay, understood. I'm just confused about this because you're sitting on a loss of about 1.18 lakh rupees, right? Let's see what our experts have to say about this. Experts, Naveen from Karimnagar in Telangana, he currently holds about 1,200 shares. 100 shares at 1,200 a piece, and the stock has fallen significantly, incurring him a huge loss of over a lakh. Mr. Lancelot, how does the business look like to you, and should our viewer exit the counter or not?
So I think one should look at exiting the counter because the business looks pretty difficult going forward. And it has a lot of accumulated issues which have taken place in the past, and those need to get resolved as well. So I think it's going to be rather challenging for him to kind of see his price back again. So it's better to exit and look at taking the whatever money is there and putting it into a company where the downside at least is limited and you could see significant upside.
Okay. So then, I would like to ask a follow-up on this. If not Affle India from the same space, is there any other counter that you see as perhaps more attractive?
Well, there are better opportunities. Like for example, if you look at the housing finance space, there is an opportunity in terms of housing finance because that is seeing a lot of positive flows in terms of lower interest rates, and there's a growing demand. So one can look at a company like say a Bajaj Housing Finance, although it looks expensive at even this at this time. But if it does correct a bit, or even one needs to look at it from a longer term perspective, this business would grow much better than trying to remain in Affle India Limited.
Okay, sorry, I have a correction to make. I think our viewer wanted to talk about Affle India. Gentlemen, do you have any coverage on Affle?
No, I don't have any coverage on Affle actually.
Okay, no issues. Gaurav, would you be able to give us some advice on Affle?
Yeah, Affle India currently trading at 1585, so that makes the client, the viewer, to be in a positive side. Stock is currently trading in a broad range. On the higher side, it is close to 1700 and 1350 on the downside. So he should continue holding his position, take a stop loss just below 1500 and look for a first target of close to 1700, and then 1800, 1850 is also possible, where he should consider taking at least 50 to 60% of his position.
Understood. Thanks for that view, Gaurav. With that, we have a caller joining us from Guntur. Hi, Dheeraj. Good evening.
Good evening, ma'am. Thanks for the show, actually. I have
It's
been
our pleasure, Dheeraj.
following
Please.
it.
Yeah.
Following the show.
Yeah,
Ma'am,
please
my
go
query
ahead.
is regarding my query is regarding Bharti Airtel. So they posted their results like 2 hours back.
Yeah.
And I'm holding 160 shares of Bharti Airtel at 1830 rupees. So what's the view for the short term, like for the next 45 days or 2 months?
Understood.
Can I expect an upside target of 1950? And one more thing is, since last 2 months, the entire power sector is like weak, and there is no upside or downside. It is like almost constant and range bound.
Yeah.
So can we take a fresh position in counter like REC at current levels, ma'am? Is one more query, ma'am.
Okay, Dheeraj, I'm afraid that we'll be able to take only one query at a time. So we'll stick to Bharti Airtel for now. And you can call us again and we'll get your second query also answered. So Gaurav, coming to you on the short term, rightly said that Bharti Airtel has just come out with its Q4 results. So the net profit has actually beaten our NDTV profit estimates, but is down, over 25%. Revenue is up 6%, and EBITDA is also up 9.8%. So, considering these numbers, what do you, think that the stock is going to react tomorrow? How will there be any sort of uptick, or what do you anticipate? Seeing the charts and the results?
I will not specifically be concentrating on how the stocks reacts tomorrow only. I'll be looking at a broader picture. The viewer says that he is willing to hold the position for a couple of weeks to, I think, 1 to 2 months. From that perspective, it is he should hold on to his position, and if in any adverse position, may it be due to the result factor or due to the any other factor that the stock slips towards 1700 levels, then he should also consider adding the position if he is having some spare funds left with him.
And one more question. He rightly mentioned that he is seeing the levels of 1950. So do you see any sort of upward momentum and the stock reaching those levels anytime soon?
It's quite possible. 1900 is not that far of a level for Bharti Airtel. But the time frame is a little tricky to address, in that whether it will be able to achieve it in 1 to 2 months or not. That's a little difficult. But if he can extend the time frame to maybe 3 to 4 months, then yes, that target is pretty much achievable.
Okay, got it. And now we have Apurv joining us from Patna. Hi, Apurv.
Hey, hi, ma'am.
Hi.
So I'm holding ACC share.
Okay.
Its approx is 2000. I average it down.
Okay.
I have 300 shares. So from after result announcement, it is having free fall.
Yeah.
So
Sure.
What should I do?
Got it.
I can hold it till 1 month, I guess.
Okay. Very short-term holding, but okay. Mr. Lancelot, what is your take on ACC Cement? Apurv from Patna currently holds 300 shares at 2,000 rupees a piece, and ACC Cement, as he rightly mentioned, after profit declining approximately 20%, revenue in fact declining approximately 20% in its fourth quarter, the numbers have been a little jittery on the charts. What would your suggestion to Apurv be?
So I think, while the longer term industry outlook for cement is pretty strong, ACC had come out with difficult numbers. And even today, it's trading at about 9 times its EV to EBITDA. So it looks a little bit expensive. So one should wait for a quarter or two, look at the results and the outlook then. And then if it continues to fall, then, if the outlook is weakening, then one should exit the stock. But if it is showing improvement and the valuations have corrected a bit more, then it becomes an opportunity to invest for the long term.
Understood. Thanks for that view, Mr. Lancelot. And just a quick disclaimer for our viewers, NDTV is a subsidiary of AMG Media Networks and Adani Group company, the channel you're watching right now. And with that, we have a caller joining us from Madurai. Hi, Mani. Good evening.
Good evening, madam.
Yeah, how can I help you today?
Madam, yesterday I bought Hero MotoCorp 3,935 rupees 10 cents.
Yeah.
Today, Hero MotoCorp results. Can I hold? How are the results coming? Can I hold or sell the stock?
Mani, are you a long-term investor or a short-term investor?
I will hold this stock for 1 year, madam.
1 year, understood. So, Mr. Lancelot, coming to you, how are the fundamentals of Hero MotoCorp looking like? And rightly said, it has come out with its Q4 results, and the results seem pretty decent. So, what's your outlook on the same?
So, from a result perspective, has looked good, but from going ahead, I think the look is going to be very challenging for the two-wheeler space because you are seeing a lot of new models come in. There's a tough challenge from the electric two-wheeler market as well. And so, given that background, one should look at maybe booking profits and and exiting for a while, wait till valuations become more attractive, and then one can look at investing if required.
Okay, understood. And on that note, Mr. Tikuna and Mr. Sharma, thank you so much for joining in and answering all the queries of our viewers with such patience and valor. Thank you so much, and we will see you again. And viewers, a quick note to you, you can continue writing to us on WhatsApp with all your stock related queries. We're also live both in the morning as well as in the evening with Ask Profit specially, so you can call in then as well. But do stay tuned to the channel as we have a lot more lined up for you right on the other side.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Speaking from Adhampur Air Base, which played a critical role in repelling Pakistan's missile and drone assaults last week, Prime Minister Narendra Modi issues a strong warning to Pakistan-backed terrorists, declaring Operation Sindoor as the new normal for strikes against terror bases.
There were conversations between Indian and US leaders on the evolving military situation. The issue of trade did not come up in any of these discussions.
Ministry of External Affairs denies any discussions of trade with the United States in the discussions that took place between the two countries since India launched airstrikes on terror camps in Pakistan and Pakistan-occupied Kashmir. The Nifty Sensex end lower for the day, fall over 1%. Nifty IT is the top losing sector for the day, dragged by Infosys and HCL Technologies. India approaches the World Trade Organization with a proposal to impose retaliatory duties against the United States over President Donald Trump's tariffs on steel and aluminium. Commerce and Industry Minister Piyush Goyal will lead a team of senior Indian officials to Washington starting May 17th for discussions with their US counterparts on the proposed bilateral trade agreement. India's retail inflation slips to its lowest in nearly 6 years, with cooling vegetable prices leading the deceleration. This is the lowest inflation reading since July 2019. And Trump and the Saudi Crown Prince signed a partnership on the first leg of the president's diplomatic tour. The US signs a $142 billion arms deal with Saudi Arabia, announcing it as the largest defense sales agreement in history. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. It's our top focus this evening. Speaking from Adhampur Air Base, which played a critical role in repelling Pakistan's missile and drone assaults last week, Prime Minister Narendra Modi has issued a strong warning to Pakistan and Pakistan-backed terrorists. He declared Operation Sindoor as the new normal for strikes against terror bases, reinforcing India's unwavering readiness to combat state-sponsored terrorism.
जब हमारी बहनों, बेटियों का सिंदूर छीना गया, तो हमने आतंकियों के फन को उनके घर में घुस के कुचल दिया। भारत माता की जय! भारत माता की जय! 9 आतंकी ठिकाने बर्बाद हुए, 100 से ज्यादा आतंकियों की मौत हुई। आतंक के आकाओं को अब समझ आ गया है, भारत की ओर नजर उठाने का एक ही अंजाम होगा, तबाही। हमारा लक्ष्य पाकिस्तान के अंदर टेरर हेडक्वार्टर्स को हिट करने का था, आतंकियों को हिट करने का था, लेकिन पाकिस्तान ने अपने यात्री विमानों को सामने करके जो साजिश की रची, मैं कल्पना कर सकता हूं वो पल कितना कठिन होगा जब सिविलियन एयरक्राफ्ट दिख रहा है। और मुझे गर्व है आपने बहुत सावधानी से, बहुत सतर्कता से सिविलियन एयरक्राफ्ट को नुकसान किए बिना कमाल करके दिखाया, उसका जवाब दे दिया आपने। साथियों, आतंक के विरुद्ध भारत की लक्ष्मण रेखा अब एकदम स्पष्ट है। अब फिर कोई टेरर अटैक हुआ तो भारत जवाब देगा, पक्का जवाब देगा।
And rebutting US President Donald Trump's claims of stopping trade with both India and Pakistan unless they agreed to end hostilities, the MEA clarified and said trade was never discussed with the US officials. MEA spokesperson Randhir Jaiswal in a briefing said that India has conveyed its position on President Trump's statements on India-Pakistan ceasefire to the US authorities. He added that a ceasefire was proposed when Pakistan asked India's DGMO for talks because of the effective attacks by the Indian Air Force on Pakistani bases.
From the time of Operation Sindoor commenced on 7th May till the understanding on cessation of firing and military action on 10th May, there were conversations between Indian and US leaders on the evolving military situation. The issue of trade did not come up in any of these discussions.
And EaseMyTrip.com, one of India's leading online travel tech platforms, last week issued a travel advisory suggesting commuters to visit countries including Turkey and Azerbaijan only if it was unavoidable, since these two countries have extended support to Pakistan amid increasing tensions with India following the launch of Operation Sindoor. Ease My Trip co-founder Prashant Pitti spoke with us just a few hours ago on whether this has altered the Indian traveller's perspective.
In the need of the hour, where we see that there are certain countries where our travelers are traveling, and these countries have decided to be our adversaries and stand on the wrong side of the history, we have decided to issue the travel advisory to people who are traveling to Azerbaijan and Turkey. We did not boycott them or cancel their flights, because for many people, Turkey is just a layover. So that would be too much inconvenient for people, because of which we have decided that we will issue travel advisory and ask people to travel only if they must, and otherwise not give our hard-earned money to the countries which are not in the favor of our nation and choose to be on the wrong side. The advisory, we were the first ones to issue this advisory. We welcome that many OTAs have taken the similar stance this time. In the Maldives, we were the only one who boycotted Maldives, but this time few other OTAs have taken the similar stand as Ease My Trip. We welcome that. And since then, we have seen 22% cancellation on Turkey's side and more than 30% cancellation happening on Azerbaijan side. Now, if I must tell you, Indian tourism towards Turkey and Azerbaijan has been increasing rapidly since some time. Last year, around 2.5 lakh people visited Turkey and 2.3 lakh people visited Azerbaijan. And even if you take meager 60,000, 70,000 rupees spent per passenger, it equates to a very big sum of more than 3,000 crores put together for both the countries. And which we are advising to our travelers that these are not India-friendly countries. They should